They got it. They were bigger risk takers. They understood the opportunity, seeing through the volatility, seeing through the macro and saying, let's just keep going there. It's a matter of time. It's all about time horizon in this space. I think this cycle is not 2019. So I don't think we get the long pullback correction. I think we'll get a running correction sideways. This space is going to be bigger than 10 trillion pretty soon. Here we are at 30,000 today. Well, find me another trade on Earth that's as good as that. Politically, they need to say that they conquered inflation and that everything's going to be okay because people can't look forward. It's not their job. It's our job as macro people to do that. So I feel like it's part of that. And then I've got a bigger hypothesis that you're aware of, that they kind of had to jack up rates to really get them down. Because if there was any remnants of sticky inflation, which I don't believe anyway, but if there was any inflation expectations that didn't allow yields to fall, I think they're in real trouble because of the interest payments that need to be made. I kind of think there's part politics, because they just want to say that they've conquered inflation, although they're going to get the own goal of unemployment, so I don't really understand that. I think there's a bigger play, which is like, if they don't get rates down to 2% by the end of the year, there's a bigger problem to have. We have the pandemic. That was a big shock to a lot of people, right? And you come out the other side, and suddenly we've got this massive inflation, and everyone's taking a haircut of like 5% in real terms, and everyone's feeling impoverished, right? You've seen every business around the world, consumption has dropped. The next thing, the output of what Powell has just done is, oh, by the way, you got screwed from inflation and now you're going to lose your job. By the way, the money you thought was safe in the banking system is not safe. Is there something about the boomers that they have one fear, which is the 70s? I can't find anything that suggests we're in a structurally inflationary world. I just see a reverse and opposite effect of the pandemic, kind of like post-World War II. But these guys are so obsessed of their ghosts of their past. This is not the millennials' ghost. Their issue is all sorts of different issues. You know, they've got a problem with technology coming into their workforce and competing with them at scale. It's like, this is not the fucking 1970s.
No.
For that, with a population that's aging. Alternative financial system attracts more people over time because the old one keeps proving itself to be unreliable and actually disadvantages people. So I think that's the case. It's been, well, both of our core assumption for a while that it doesn't have to be an instant migration like Balaji's saying.
Right.
That migration will come. Yeah. So let's say you're Nico, the producer, who's listening to this call. Nico, millennial, can't afford to buy a house. What does Nico do? Buys NFTs, buys crypto, because it's an asset, right? All assets are a future deferred consumption. So you buy a house now so you or your kids or somebody else can spend that money in due course. If not, there's no point having it. It's a utility. So assets are just deferred consumption. So if you're 34 years old now and you want to accumulate assets, but you can't afford a house, so digital assets become an obvious place. But you will get young people who can't afford, can't fractionalize it. So if you want to put 10% of your savings in, right, you can't afford to do that in a house because it doesn't pay your mortgage payments. So what you end up doing is looking for something else. Conversations with investors. Now you're onto your fourth fund now.
Yeah.
Your conversation with investors, when you started, a lot of what you saw was family offices, right? They got it. They were bigger risk takers. They understood the opportunity. If we go back to whenever it was, 2018 or 19, when we had our first conversation on Real Vision about this, the big difference between then and now was the applications layers being built. And they get that. They see that. And this is closer to, you know, the last people in will be when it becomes ubiquitous and everybody has it on their iPhone. But it's this application layer, the consumerization and the integration of blockchain technology that's big. I've heard a lot from, I mean, everybody, all of my friends are all in the Middle East all the time on this endless road trip. Because there's capital and they understand that the fossil fuel economy over time is going to shrink versus the renewables economy. So they're like, well, we need to have a stake in the future. And they've been very strongly behind this. And my view on this is like, you and I saw this, is the US, after they left the gold standard, tried to restrict their currency. So the FX market started in London and became huge. Then the US was like, well, we're not going to lend to you foreigners because we're still trying to protect our own economy. So the UK developed the Eurodollar market, which became the largest market. That and the FX market, the largest markets the world has ever seen. Then the US made the third strategic mistake, which was, we're not going to let our banks do OTC derivatives. So we're going to change the capital reserve ratios for banks. And the UK changed it and said, no, we're just going to arbitrage you. And they won that entire business. So, I look at it and the UK has got a problem. It's got no growth industry, a bit of fintech, that's it. It's lost the capital markets to the US. And here's a $1.7 trillion business. And it's just a regulatory arbitrage business of which they understand, and they want to regulate it. And we know that if Coinbase tomorrow, if the UK said, yes, we're in it fully, Coinbase would relocate like Goldman did and every single investment bank did. All of their talent pool ended up being in the UK. It's easy. So my two ideas for that, obviously digital ID that we've all talked about, and that's a no-brainer. But the other one is Emad. I think you might have met him at Global Macro Investor Roundtables. He was a GMI guy who built Stability AI. And I spoke to him. I said, well, why the hell don't you tokenize the use of the data?
Oh,
because that allows everybody to participate in it, as opposed to having to buy the equity, everything else. We can all participate in the ecosystem because it's going to replace humanity in various ways. You need to offset, because it can't just be UBI, but the Yatsui idea of universal basic equity is this. Let people participate in this change and don't just keep it to bloody Google or Microsoft. But I think he knows blockchain. I mean, he's all over the space.
Mm-hmm.
So I'll just keep working on him because I think it's exactly the right use of a universal data set of such power is tokenize it. So then if you are building an application on top and you're drawing a lot of the data, you pay for it with a token. And if you're putting data in, you can receive tokens, and that creates an economy. I think this cycle is not 2019. So I don't think we get the long pullback correction. I think we'll get a running correction sideways, much like 2013, 16, those kind of ones. So that leads me into the final question. Is clearly you were like Fox with this 20th century Fox. You had the name 10T. You're like, this space is going to be bigger than 10 trillion pretty soon.
Yeah.
It's going to look out of date.
Yeah.
Right? So I think it's the best just risk-adjusted reward ever. And I said that last cycle, but I think it's the risk side of the equation has shrunk.
Yeah.
The reward side is still unknown, but ridiculous. When I first did that first ever macro strategy piece, I said, look, I think Bitcoin's worth $1 million. By when? I don't know.
Right.
Kind of feels like, probably. By when? I don't know. And so therefore, here we are at 30,000 today. Well, find me another trade on Earth that's as good as that. And Bitcoin will underperform some of the others in the space.
Yeah.
The ETH Bitcoin cross.
Yeah.
The monthly version of that, it's just a huge wedge. I'm like, since then, Real Vision has integrated NFTs, digital wallets, digital IDs, all sorts of stuff. Then I built an entire asset management business, which is a fund of funds, just investing in that space. And then I built another business which tokenizes the world's largest cultural communities for all the big brands. That's how fast this has changed.
Right.
You've pivoted your entire life. I've pivoted my entire life. Alan Howard's pivoted his entire life. I mean, it's unbelievable how much is being built here. And we're all building different parts of this ecosystem out. And we've all got friends who are building other parts of the ecosystem out. It's ridiculous.
Yes.
I think this is the best macro setup of all time that I've ever lived through. Where we are in the macro, what this means for this adoption of the Bitcoin life raft or the digital asset life raft. He completely concurs with my view that it happens over time. We get these accelerated moments in the booms and then they pull back. But each time there's more people in Noah's Ark or the life raft. And I think that's really interesting. Seeing through the volatility, seeing through the macro and saying, let's just keep going there. It's a matter of time. It's all about time horizon in this space and how to structure your life that you can accept the volatility.